Okay, so a warm welcome to everyone. Good evening, and I'm very happy. Thank you for joining for the first Beyond Classroom session for the 2024 year. And today we have Rakesh Kadilya from UB Securities, and he'll be talking about bonds and how mutual fund distributors can have the opportunity in bond markets and what is it in bonds that they can provide to their investors. So Rakesh, we can start.
Thank you, Nishant. Thank you. And good evening, everyone. Before we getting started with this presentation about the dynamics of the bonds in the credit space, and I just want to know the feedback from your end. I mean, have you ever invested in the bonds earlier, or this is the first time that you are? So if you already invested, I want you people to drop a message in the chat box. So accordingly, we can take it forward. And if this is a completely new product, you can type no in the chat box. We'll wait for 1 minute and we'll continue with the session. Okay. So maybe NSGBs. Good. Okay. Yeah. So here in this session, we are trying to cover the, so what is the coming to the structure of the session? So this is the one which we are going to cover up in this particular session. So here we just want to tell you about many of the few already aware of the bonds and the types of bonds, and we'll cover it up. And later we'll cover up the variations of NCD bonds and how the calculation of bond pricing, types of pricing, and the relationship with the yield part. And we'll talk about market placements, type of securities, rating categories in India, comparison between bonds versus fixed deposits, and allocation strategy, and the key consideration that you need to look into for your end investor point of view. And later we'll cover the taxation on bonds and major risk that is involved in the fixed income instruments. So before that, here I just want to tell you about what exactly the bond is. So bond is a fixed income instruments that represent a loan from an investor to a borrower. So it's just like a contract between an investor and a borrower. When the borrower uses the money to fund its operation and the investors receive the interest on the investment. So fixed income securities, as I told you, bond is a fixed income instrument. These are the investment instruments in which cash flows generated in the future are already predetermined. So there are two types of fixed income instruments. One is money market instruments and other one is the capital market fixed income instruments. So generally the tenure less than 1 year that comes under the money market fixed income instruments like T-bills, certificate of deposit, CPs, etc. And if you talk about capital market fixed income instruments where the corporate bonds, government bonds, this is also called as a bonds. And if you go with the next slide, this is the one which I discussed in the previous one in the simplified terms where there is a promised and the fixed cash flow. It is a return on the principal at the promised intervals. So whenever the investor buy a bond where he'll be receiving the regular interest income and whatever the principal that he invested, that he will be returning back at the end of the maturity. And coming to the fixed income securities and types, so there are various types of fixed income securities. So coming to G-Secs, strips, SDLs, G-Secs, all these comes under the government securities. Treasury bills, commercial papers, commercial deposits, this comes under the money market instruments. And coming to the bonds also, where we have classified wide range of bonds in the market in the current scenario, like the fixed coupon bonds, market linked debentures, zero coupon bonds, tax-free bonds, perpetual bonds, and subordinated debt. And coming, so here we'll discuss in detail about the government securities. So as I told you, government G-Secs, SDLs, and the T-bills that comes under the government securities. So G-Secs are issued by the Reserve Bank of India on behalf of central government. So the tenure usually ranges from 1 year to 40 years. So where the principal is repaid at the maturity and the G-Sec offer a fixed coupon and is payable at semi-annual basis. On an yearly, they'll get a 2 times payout. Being a sovereign security, there is a no default risk that you can consider in the G-Secs. And SDLs are issued by the state government. So SDLs generally carry a tenure of 10 years and above, and they are managed by RBI. So principal is repaid at maturity, just like a G-Secs. And SDLs also offer a semi-annual basis fixed coupon. And they are issued at a face value. And SDLs carry a low risk as compared to the AAA corporate bonds. And coming to the treasury bills are a short-term money market instruments issued by the Reserve Bank of India on behalf of the central government. Treasury bills have a maturity of 91 days, 182 days, and 365 days. So T-bills are zero coupon securities. They are issued at a discount, payable at a face value on the maturity date. Being a sovereign security, no default risk, that you can see it in the treasury bills. And coming to the money market instruments, a money market instrument is a medium that is tapped by the banks, NBFCs for raising money for less than 1 year tenure. So money market instruments include treasury bills, which we discussed in the previous slide. Apart from that, there are two other papers like the commercial papers and the certificate of deposits. So commercial papers always issued at a discounted and redeemed at par. So the denomination of this particular commercial paper comes with 5 lakhs. And the maturity is like a less than 1 year. And the whatever the securities that will be transferred will be credited in the demat of the end investor. And in the same way, certificate of deposits, which is issued by the commercial banks all over India or NBFCs, denomination is like 1 lakh, where they can invest multiples of the 1 lakh. So maturity is also just like a commercial paper, which is a less than 1 year. And in the same way, the securities will be credited in the demat form to the end investor. And here we'll cover more about the non-convertible debentures or a corporate bonds. So usually a medium to long-term debt instruments issued by the companies to borrow money for business purpose, just like a loans. So the name itself says that non-convertible debenture. So this cannot be converted into shares of a company. Since this is a pure debt non-convertible instrument, so debt instrument with a fixed maturity date and the fixed repayment schedule. So listed NCDs are duly registered with stock exchange, and such issuers have to follow all the guidelines prescribed by the SEBI. So earlier, coming to the bonds, so earlier the face value of the bond is like, that is a very good product for HNS and UHNS, where the face value is like a 10 lakhs. So where the HNS and UHNS only can invest in this type of instruments. So I mean, coming to the post 1st January, where government has taken some initiative and where they reduce the face value of corporate bond, right, from 10 lakhs to 1 lakh to see the retail participation in the market. And even there is some more update. I mean, recently there is one more meeting which happened with SEBI, and even they are trying to reduce the face value instead of 1 lakh to the 10,000 for the corporate bonds to see a lot of retail participation coming from across the country. And here coming to the important aspects of the bonds. So these are the few aspects which you need to look into when you purchase a bonds. Like one is the ISIN, second one is the demat account, third one is the secondary trades through stock exchange. So ISIN is the International Securities Identification Numbering System, a global standard for unique identification of a financial security. So every bond comes up with a 12-digit unique ISIN. And the second one is the demat account, be it NSDL or NSDL, corporate bond is dematerialized form, gets credited into the demat account of the buyer, just like a shares or a mutual fund units. And secondary trades through the stock exchange. So all the trades will be happening through either BSE or NSE. Since the settlement will be happening through exchange, there will be no settlement risk. So money gets refunded if the stock is not received. And coming to the variations in NCDs, so these are the types of variations in NCDs. One is the redeemable NCDs, perpetual NCDs, listed NCDs, and unlisted NCDs. So if you talk about redeemable, they are payable on the expiry of the specific period, either in a lump sum or in installments. They are redeemed either at a par or at a premium. So higher the tenure, the higher the risk, and the yield also you can expect a higher yield in this particular redeemable NCDs. Coming to perpetual, there is no undertaking for the repayment of the money is given by the borrower. However, the redemption can happen through excess of a call option or a buyback of the instruments. So repayable on the winding of the company or when the company chooses to pay off or they reduce the liability, then they'll come up with a call option. So whatever the securities which you are holding, you can give it back to the entity. And coming to the listed, so higher liquidity in the secondary market, and they are tax efficient, and issuer needs to disclose the information in line with SEBI regulations. So whenever they get the financials getting audited for every quarter, the moment of whether it is audited financials or unaudited financials, they need to submit those financials to the stock exchange within 45 days from the end of the quarter. And whenever there is a meeting that is happening internally, like a board meeting kind of a thing, 2 days after that, they need to submit. So what is the outcomes of the meeting to the SEBI? And coming to the unlisted, these are not traded on the exchange, but through the over-the-counter OTC market, where you can buy the unlisted NCDs. And the other one is a clean pricing versus dirty pricing. So these are the two terms which you need to look into before investing into the bonds. So that dirty price depicts a bond's actual price. It includes secured interest. Therefore, it is price paid by the investor when he purchases a bond. So accrued interest is simply the interest secured from the last coupon date till the date of the transaction in the secondary market. So I'll cover in detail in the coming example about this accrued interest. And the dirty price always remains equal to or higher than the clean price as interest is added to the market price. On the date of the coupon payment, both prices are same. So for example, if there is an investor X who invested 1,000 rupee in a bond, which is a coupon rate of 8%. So note the coupon will be paid on annual basis, will be calculated on per annum basis. The bond has a monthly interest payments and with the last interest payment on the 15th December 2022. And the Mr. X is planning to sell the bond on 28th December 2022. So there is a difference of 13 days. So here, thus the accrued interest is equal to 1,000 rupees into coupon 8% into 13 days. So whatever the 13 days interest. So if you do calculate where you can get 3 rupee. So dirty price is nothing but a clean price plus accrued interest. Clean price is nothing but a face value of the bond, which is 1,000 rupee plus 3 is equal to 1,003 rupees. So this is the actual price required to be paid by the buyer on 28th December would be 1,003 rupee. So hope you got some clarity about the dirty pricing and the clean pricing. And here this is since you this inverse relation between the price and the yield of the bond, since you are already aware. So whenever the interest rates go up, yield prices come down. Whenever the interest rates comes down, the yield prices go up, which is an inverse relation which it has. And coming to the markets, there are two types of markets. One is a primary market and other one is a secondary market. So primary market is where the borrowers or issuers raise the money. So investment money goes directly to the issuer. He can utilize that funds as per the purpose permitted in the transaction. So for example, if there is an entity who raises a bond of 50 CR, they might be for an expansion kind of a thing. So they'll immediately place that particular bond in the primary market. So there are few players who participate in the primary market and they'll immediately take the stock into their own books. So whatever the money that immediately the issuer will get the money and he can utilize that money for the expansion purposes. So whatever the terms which is mentioned in the term sheet, according to that, he can utilize that funds. And bonds are invested at a coupon and which the issuer issues them. And listed bonds are always rated by accredited rating agencies by SEBI. And such bonds become tradable in the hands of investor in the secondary market, post investment in the primary. So once the primary market, once the investment made in the primary market, then those bonds can be tradable in the secondary market. So, and coming to the secondary market is the market wherein bonds get traded just like a shares at a prevailing yields. Indian stock exchanges do not have a order matching system like equity shares yet for the bonds, since the bond markets are underpenetrated and a shallow part. So continuous efforts are made by the regulator to deepen the bond in the markets. So Aspro, so we as an Aspro tries to deepen the markets and provide hassle-free platform for boosting the liquidity in the market. And coming to the bonds, there are two types of bonds. One is secured bonds and other one is secured bonds. So coming to the secured, at least 100% of the principal is secured by either mobile assets, immobile asset, gold backed or cash collateral. Let's say if there is an entity who come up with a secured bond of 50 CR. Let's say the company gets default. So whatever the collateral they put as a security, that collateral, be it mobile assets, immobile assets, or a gold backed, whatever it is. So there will be a debenture trustee who act on behalf of every investor. So he'll come into the picture and whatever the collateral this particular entity has given, he'll liquidate the collateral and the first preference will be given to the persons who invested in the senior secured bonds. And the second preference will be given to the shareholders, promoters, and directors of the company. So investing in the secured bonds is safer than the unsecured bonds. And coming to the unsecured bonds do not have any assets backing them as a security. These bonds are more riskier than the secured bonds since there is no assets to liquidate. Such bonds generally offer a higher rate of interest due to higher riskiness. So investors should also prefer, before investing in these bonds, they need to prefer the secured bonds instead of going for unsecured. And coming to the, so these are the parties involved in the primary listed NCD issuance, like issuer, legal counsel, debenture trustee, rating agency, SEBI and stock exchange, R&T agent, depositories, valuation agency, and the investor debenture, investors or a debenture holders. So the person who buy the bond, they are known as the investors or a debenture holders who holds the debenture. And issuer, the issuer who raises the money through the bond. So be it Spandana, Muthoot, or Navi, whoever it is, the issuer is the one. So there will be legal counsel and there will be a debenture trustee for all the senior secured bonds, which I mentioned in the earlier slide, and rating agencies before investing in this particular bonds. So credit rating plays a major role. So if you go with a high rated paper where you can see the high safety, if you go with a low rated paper where there is a low safety. So, and all the trades will be happening through the exchange only, and there will be a depositors also, be it CDSL or NSDL. Accordingly, you can buy the bonds. As I mentioned, rating categories in India. So this credit rating agencies, be it ICRA, CRISIL, CARE, India Ratings. So these credit rating agencies, they'll come up with their ratings for each and every entity. So you can consider AAA. Currently, we are considering AAA as the highest safety paper. AA is a high safety. A is a adequate safety. Triple B is a moderate safety. Double B is a moderate risk. B is a high risk. C is a very high risk. And D is a default. I mean, are yet to default or expecting to be in default soon. So people go with a higher ratings. If they want to go for a much secured point of view, they can go with the high rated papers where they can get less yield. If you go with the low rated papers where you can get a high yields. So it completely depends upon your end investor point of view, what type of returns that he is expecting and what type of safety that he is looking into and what intervals that he is planning for. So accordingly, you can suggest the papers based on the ratings. So here we'll talk about comparison between the bonds versus fixed deposits. So I believe most of you people, have already invested in FDs. So how exactly, what is the advantages and disadvantages of here we'll discuss. So coming to the advantages, higher yields possible to generate positive real returns and beat inflation. As I mentioned, these are the fixed income instruments. So the tax efficient products with higher post tax yield, like a tax free bonds. So there are various types of bonds, like a tax free bonds you can consider. So flexible investment options depending on the risk appetite sector and the credit preferences. And ability to structure the cash flows as per the requirement, like a tenure, amortization, bullet, put option, or a call option. So there are multiple types of papers. So for example, there might be investor who wants to invest 5 lakhs or a 10 lakhs and looking for a monthly payout paper. And they are looking for a monthly interest returns. So there are the papers which gives the monthly returns. And for example, if they are looking for a quarterly payout paper, there are the papers which gives the quarterly payout, annual, in the same way, annual returns. And there might be some investors who is looking for amortized bonds. So amortized bonds in the sense, whatever the principal that they are investing. So that principal also will come back to the investor on a monthly basis or a quarterly basis, depends upon the paper they took. Yeah. And so there are the wide scope and the wide range of bonds available in the market. So according to your end investor point of view, you can suggest. And coming to the disadvantages, lower liquidity, especially in the lower rating categories below AA category. For example, if you want to sell the paper, let's say if you buy a bond of it with the rating of AA and above. If you want to liquidate, you can sell the paper in the secondary market. If you find a right buyer, you can sell it through the exchange. And if it is a less than AA rated paper, I mean, liquidation is the one of the major constraint. And that is the one disadvantages for coming to the bonds market. And access is difficult for the retail investors. Price may fluctuate on account of movement in the interest rates and the change in the credit profile of the issuer. So platforms like Aspro can provide access to cherry pick credits and also facilitate secondary market liquidity. So we can help you with that as well. And coming to the high performing credit, a business fixed income products, majorly NCDs under private placements, are a less explored avenues, which helps to diversify the debt portfolio with better yields. So bonds with a tenure of 1 year or 3 years, like a short-term papers. If you go with the short-term papers, where you can avoid the duration risk, and it has a potential to offer a regular interest or a cash flow. And IFAs or distributors have an upfront income on the basis of yield spread across the different bonds, tenure, and the credit rating. So as I mentioned, if you go with the high rated papers where you can make a very less spread. If you go with the low rated papers where you can make a high spreads. So it depends upon the paper. And before suggesting the paper to your end investor, so I request all the distributors and IFAs also to go through the details of the issuance, like term sheet, IM, rating rationale of the particular entity, what are the current financials of the company. So post evaluating all these things, then you can take a decision whether to suggest this particular paper to your end investor or not. And coming to the allocation strategy, so depends upon your client requirement. So based on his financial goals, so based on his financial goals, asset allocation, I mean, what type of risk that he wants to take in, and what is the holding period they want to put, I mean, invest in this type of bonds, and what is the concentration risk that he wants to take it. And you can also check the internal liquidity and the able navigation before allocating the bonds to his portfolio. And coming to the key considerations, this is the asset allocation. So we believe there are three types of investors in the market. One is the aggressive investor, moderate investor, and conservative investor. So aggressive investor, they typically falls in an age group of 25 to 40 years. So they comes with a high income, and where the investing style is like a wealth creation. So highlights is like they expect a high return expectations and equity bias and risk appetite. They can take risks. So these people comes under aggressive investor. And the second investor is like a moderate kind of investor, where typically they falls from 35 to 55 years and can observe some volatility in the portfolio. And investing style is like a capital growth. So here he'll balance his portfolio by allocating, by diversifying his portfolio into debt, gold, equity, or mutual funds and all. And coming to the conservative, so this profile, they typically falls at 50 plus years and corporate treasuries or public funds. So generally their investing style is all about the capital protection. So for them, a fixed income is the one which they are looking into. So for them, you can suggest the fixed income instruments. And coming to the allocation strategy and scenarios, so these are the uh, three types which we discussed, like a conservative investor, moderate investor, aggressive investor. Sorry, aggressive investor. If it is a conservative investor, where his 15% of his portfolio he can invest in the cash or fixed deposits, and the 40% he can invest in equity, and the other 40% in debt, and other 5% he can invest in others like a gold, a real estate, or a crypto. And if he is a moderate investor, then the 10% he can invest in cash or deposits, 55 into equity, 30% into debt, and 5% into others. And if he is an aggressive investor, where 5% he can invest in cash and deposits, 70% equity, and 15% debt, and 10% like gold, real estate, and crypto. So here what we are trying to say is debt should be a part of everyone's portfolio. And coming to the taxation of bonds, so here, these instruments are taxed annually. And for the listed papers, the tenure is like 12 months. Unlisted paper, the tenure is like 36 months. So to gain the capital gain tax rate, if it is a listed paper, if it is a short term, that falls as per their income tax slab. If it is an unlisted paper and the short term, that also comes under the income tax slab of the investor. And if he is investing for a longer term, like more than 3 years and above, where for a listed paper, there is a 10% flat rate. For an unlisted, there is a 20% flat rate. And there is no indexation benefits are applicable for this. And there is no deferred tax treatment also. And coming to the TDS, whatever the interest that he gains in this particular bonds, where there will be a 10% TDS will be automatically deducted from the issuer, and the rest of the amount will be transferred to the investor, to his bank account. And coming to the major risks in the fixed income instruments, so here inflation risk, interest rate risk, default risk, or a credit risk you can call, and downgrade risk, and the liquidity risk. So these are the risks that is majorly involved in the fixed income instruments. So before suggesting, you please go through the details of the entity or a issuer, I mean issuance details, and accordingly you can take a decision. So here coming to the Aspro, here Aspro is one of the group entity of UB Group. And here in UB, we do deal with multiple debt products like loans, supply chain finance, co-lending, lab. For fixed income, we do have a separate platform like Aspro. So through this platform, this is a powerful tech marketplace. So that helps corporates raise debt on one side and enables wealth partners, family offices, and corporate treasuries to the channel investments in the fixed income securities on the other side. So here our main aim is to democratizing the debt markets, taking the debt investment options to every class of the investor. So for that, where there should be a lot of retail participation. So most suitable option has to be a small denomination tradable securities, where investable surplus can be deployed and liquidated when needed. So here in Aspro, in the platform itself, currently we do have NCDs, MLDs, and CPs, which are the fixed denomination investment options, which you can look into. And here in Aspro, we are under one roof, right from origination to the distribution. Here for the sellers like NBFCs, small finance bank, enterprises, we help them in terms of price discovery, market access, trade certainty, and confidentiality, and where we'll be giving the end-to-end execution support. For the buyers like the bank, NBFCs, institutional investors, HNAs, offshore investors, or a retail investors, where we also help them in terms of deal discovery and portfolio management and all. Coming to the platform sense, so currently in India, where there are very few online bond platform providers. So Asper is also one of the platform. So currently we do have a SEBI OBP license and we are SEBI compliant. And this particular platform is integrated with BSE RFQ mechanism. So whatever the trades which you place on the platform will get reported in the exchange directly. And the same day securities will be transferred to your client's DP. Yeah, so which is very simple, fast, and reliable through the platform. And coming to the Aspro here, these are the current products like a corporate bonds, pass-through certificates, commercial papers, alternative investment funds, and these are the current products which we are offering. And soon we are coming up with the sovereign gold bonds, bond basket, government securities, and fixed deposits. And currently, we do have two platforms. For a listed platform, we do have an Aspro for listed papers. For unlisted papers, we do have UB Invest. So you can explore using this link, aspro.in/partner. You can explore, what are the bonds. And here we do have an Aspro Academy also. For example, this is if it is a new product coming to the fixed income, we do have an Aspro Academy. You can go to the website and you can find the details about the bonds in detail. And yeah, thanks. So here I just want to take a few questions from the participants. If you do have any questions, you can please drop a message in the chat box so that I can revert.
You can write your question in the chat and Rakesh ji can answer it. Also, Rakesh ji, a small request. If you can, okay, there is a question. If you can take the question, I'll ask.
1 second. Yeah, chat box. Yeah. You please read out the question. Yeah, I can take it. Achha.
Manik, he has asked a question.
Manik, 1 second. Let me check chat box. So here I can see what are so only in the demat can you invest or not otherwise. So all the securities will be transferred which are dematerialized form. So all the securities will be transferred to the end investor in the DP. Yeah.
So Rakesh ji, from someone from your team, if they can write the contact details, the website links on the chat box, I think that can be helpful.
Yes. I'm trying to do that.
Yeah.
So this is the one link where you can find the details of Aspero and the bonds. So there is a one more page also, like Aspero Academy, where you can find the details in the website.
Sir, there is a question in the chat, and that is, does Aspro will help to trade with ZCB bonds?
So currently in Aspro, we do deal with corporate bonds like MLDs and NCDs. So currently we do have some other bonds also, in the pipeline, which I mentioned, like SDL, G6 and all, and JCBs, which are not in the pipeline. So as soon as we come up, we'll let you know on that.
Hi, sir. There is my one question. Manik this side, sir. First of all, thank you, investor, for your wonderful presentation. Sir, I have one query, sir. Sir, I want to know about 81 bonds, sir.
Sorry.
Sir, 81.
Okay.
81 bonds, sir.
Acha,
What are
you want-
81?
Okay. So basically,
Additional tier 1 bonds, sir.
yes,
And
yes, yes.
how?
Yeah, please.
Please, sir, please.
So, I mean, 81 bonds are also called as 81 bonds you are referring to, right?
Yes, sir. Almost, sir. It is, I guess, tier bonds.
Additional
Yes. So
tier
these-
one
Yeah,
bonds.
exactly, sir.
Right. So these are the perpetual bonds, like the same nature. So which are in the perpetual nature and which are high risk and high reward also, which you can expect. And apart from this, there is a discretion on the payments also. And and these bonds are also called as a callable option. I mean, where you can, there is a callable option for this bond whenever if you want to exit, there is a callable option which is available for these 81 bonds, which is
Okay.
generally issued by the banks and all.
And sir, is Coco bonds and 81 bonds are same?
No, 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 no.
So what is Coco bonds?
One second. So Coco bonds, I mean, I don't have much clarity about Coco bonds, but I'll try to answer. And Coco bonds are a contingent convertible bonds, which this also which you can. So these also offer a higher yield, which I mean, this is the one which I know, and the risk profile is also higher risk, just like a traditional bonds.
Okay.
Yeah.
तो सर जनरली हम क्या देख सकते हैं कि वो डबल बी या बी कैटेगरी बॉन्ड्स होंगे, इफ आई एम नॉट रॉन्ग, 81
Yes.
बॉन्ड्स वो माइट भले एसबीआई इशू करे चाहे कोई भी इशू करे, और जनरल बिकॉज एसबीआई इज अ लीडिंग बैंक और
Correct.
81s आर हाई रिस्क बॉन्ड्स. सो मैं ये जानना चाह रहा था क्या 81 बॉन्ड्स अगर एसबीआई इशू करती है, एंड मैंने बहुत से क्रेडिट फंड्स में देखा है कि 81 बॉन्ड्स लिए गए हैं डेट फंड्स में सर. सो
Right.
जनरली क्या वो बी कैटेगरी है या बी डबल बी आएगा?
That I'm not sure actually. You can drop your number here, so I'll try to arrange a call with my team on this. And because
Definitely.
currently we are not dealing with 81 bonds and all. Yeah.
Okay. Sure. Thank you very much.
Thank you, Manik. Yeah. So I think no more. So we'll wait for 1 more minute. We'll try to take some more questions if anyone do have regarding the corporate bonds, NCDs, MLDs. If you want to know about, you can drop a message where I can help you.
Sir, if you can share any contact person's number, maybe yours or someone, who's the right person to talk to regarding all these things, mutual fund distributors can reach out to.
So I'm just dropping my number in the chat box. You can reach out to me and you can connect me over a WhatsApp also. And yeah.
Rakesh, also give a backup number of Mahipal as well, just in case if you're not able to respond. Let Mahipal's number also be there. So give your and Mahipal's both numbers.
Okay. Yes.
So I hope it was a fantastic session and you could understand the basics of bonds. And we as a company are dedicated towards high performing credit, and you can obviously you will not give 100% allocation of high performing credit to your investors, but as an allocation strategy you can give 5 to 10% of high performing credit to your investors. So we are market leaders in this space, and we can present you quite a few unique options for your investors. So I will suggest, since you have Mahipal's and Rakesh number, you can get in touch with them directly, get yourself empaneled with us, and they'll start sharing more information with you and handhold you to help you convert business.
Great. Thank you, Vikas ji, for this session.
सर आप कहाँ से हो?
Sir, I am from Kanak Jain's team.
अच्छा अच्छा, okay, got it. So any other questions we are here to answer, और अदरवाइज ये दोनों नंबर्स आप नोट कर सकते हैं राकेश और महिपाल का, और यू कैन कॉन्टैक्ट एनी टाइम. यजदी दारूवाला जी, आप कहाँ से हैं?
Sir, I am from Nagpur.
ओके
Nagpur.
ग्रेट. और बाकी कौन कौन लोग कहाँ से? जितेंद्र भंबानी जी.
I am from Gujarat,
अच्छा, विच प्लेस सर?
Kutch district, Gandhidham city.
गांधीधाम. ओके. डैनी सर, वेयर आर यू फ्रॉम? आई थिंक ही लेफ्ट. रुपेश कुमार जी. So people from various parts of the country have joined today, and we are very happy to connect with all of you. And since there are no more questions, I would like to give the vote of thanks. Thank you, Rakesh, for such a wonderful session. And thank you, everybody, for joining today's webinar. We are looking forward to connecting with each one of you individually. You can anytime contact Rakesh or Maipal for any support required. We'll
So
handle.
this is Danny from Goa.
Yes, sir. How are you?
Little glitches. I had little glitches, but I am Danny from Goa.
Yes, sir. Danny, sir. Boliye.
Yeah, I am from Goa, sir.
Yeah, great, great.
Yeah.
How are you, sir?
I am well. I am well. Thank you so much, sir.
So you are also selling mutual funds?
Yeah, I do sell mutual fund and life insurance.
Okay, great, great.
Yes, sir.
So, sir, we would like to, help you initiate into the bonds industry. This is a very unique industry, especially after the taxation benefits of debt mutual fund gone in the last budget. Now, most people are preferring to invest in bonds directly.
Yes, sir. Yes, sir. I would definitely try and assist with
Yeah,
you.
today also I think I was speaking to somebody in the industry and he said that debt mutual fund ka sale bilkul thanda pada hai. Somebody from institutional team of a large AMC, and debt mutual funds are not selling after this taxation thing. So more and more customers, HNIs are preferring to invest directly into bonds now.
Yes, sir. Yes, sir.
We'll
Definitely.
be happy to handhold all of you and guide you so that you can open a new stream of income for
Revenue.
yourself.
Yeah.
Okay.
Yes, sir. Thank you, sir.
Okay, sir. Thank you.
Thanks, everyone. Thank you, Nishant ji, for
Thank
giving
you, Rakesh ji and Soumya, for the effort. Thank you, Vikas ji, for joining in. And thank you all participants for coming today. We can end the session.
Thank you.